Well, guys, Alibaba stock is not doing investors good right now, along with basically every other Chinese stock. If you look at the chart of Alibaba over the past 6 months, this stock is down by 26%. In the past month, it's down by 14%. And it's just ridiculous the move on Alibaba. There's so many speculations and fear, and in my personal opinion, FUD going around Alibaba and other stocks. But I think that when there's blood on the streets, it is the perfect time to buy. Welcome back to another video. My name is Adam. Today we're going to be discussing Alibaba, a ridiculously cheap Chinese stock that is the Amazon of China. Right now, forward P of 23, price to earnings ratio trailing 12 months is 23. Forward P is like 16 right now, currently growing at a 30% clip revenue-wise year over year. We have so many bullish factors. There's the rise of the China middle class. It's expanding its operations in Vietnam, which is one of the faster growing countries out there. There's just so much good news, yet this stock just keeps going down and down on even like sympathy trading. So for example, TAL Education Group down another 23%. In the past 5 days, it's down 77% over concerns that China will ask these for-profit organizations that basically TAL is an after-school tutoring group to become non-for-profit. Not only that, there's concerns with Didi stock. It's down by 30% over the past 5 days, not 70%, but still ridiculous. Over 37 billion market cap right now, so to lose 29% is taking away like tens of billions of dollars from this bad boy, down 44% overall. It's just not good, and this is over because China basically said, oh, well, Didi, you didn't comply with our rules. You went ahead and listed anyways on the New York Stock Exchange, even though we told you not to. So we're going to punish you. And so there's just so much fear and uncertainty, FUD basically, when it comes to Chinese stocks right now. That's so in contrast to the U.S. markets. You look at the U.S. markets, they're up in their 52 weeks highs. They're flamboyant, right? And I mean, that's a huge contrast to these Chinese stocks right now. So Chinese investors are getting beaten down. Right now, they're taking a sell now and ask questions later approach when it comes to Chinese tech stocks, all right? So, there's a lot of fear right now. Chinese tech stocks selling continues. It is a sell first and ask questions later approach, says investors, right? And I mean, picture of Didi right there, 43%. When it actually comes to the company, okay, this is a solid company right now, $544 billion market cap, P ratio of 23. You may say, oh, well, that's a little, expensive, but check out the growth of this company. From 2018 to 2021, it more than doubled its revenue from $250 billion to $717 billion in annual revenue. Sorry, these are probably in terms of won, so don't trust these numbers, but the revenue growth is still ridiculous, basically tripling its revenue growth over the past 4 years. Also increasing its bottom line, so earnings of 64 billion won to 150 billion won, again, close to tripling their price. Right now, analysts have a average target of $292. Its current is $196. That just shows you how grossly undervalued the stock is. Even though low analyst expectations is $229. There's a lot of selling going on that I believe do not reflect the company's fundamentals and even the regulatory concerns over this company, all right? When you look at the analysis, however, this company is expected to grow 30% in 2022, 20% in 2023. It just forward P of 16. This is to me, this is just ridiculous that it's just selling day after day, along with overall market sentiment towards China. I get it. If you're a for-profit organization and the Chinese government tells you to go non-for-profit, that's huge, okay? I understand those big moves, But for a company that's like the Amazon of China to be trading at a forward PE of 16, that's growing at a faster clip than Amazon, it's just, oh man, I just don't understand it. I think it's a steal right now. And I mean, right now I own 10 shares in my main account, down 18% on that position. And I have, I think, 3 or 4 more shares in my Wealthsimple. I think I'm down by about 5% in that position. I think it takes patience, right? A lot of investors just want to sell. A lot of people just don't want to hold the stock. I mean, you go on the Yahoo Finance board, it's just a lot of people are really fearful right now on Chinese stocks, and I get it. I totally get it. You know, it's not fun to be down 15%, 20%, 30, 40%. But if you focus on the long-term growth, even if this stock does get listed on over-the-counter markets, it's still like they're still a growth beast. They still have an incredible valuation right now, incredible growth ahead of them. So I'm not worried at all. And I think that this is just ridiculous. And I mean, also Alibaba got fined $3.6 billion American because of their anti-monopolist or antitrust fine. I mean, that impacted their quarterly earnings for 1 quarter, and then the rest is just a growth story, right? So I don't think that this is going to really hurt Alibaba in the long run. And I think if you're a forward-looking investor, this is just the time to accumulate shares. Also, right now, Alibaba already practices American accounting standards. So there's a bill forcing Chinese firms to meet U.S. accounting standards. It already complies with these accounting standards, so that's not a concern. I think in general, there's just a lot of fear right now in the market that's not really reflective of what Alibaba is as a company, right? You look at the 1-year price, it's still down 21% over the past year. Like this stock has been hurting. Even though the revenue growth has been soaring, the stock price has been plummeting. So, this shows you sometimes that the markets are irrational, down 36% from the highs here. So right now, if you're looking for a deal, look to Alibaba. My friend David Modell here, he wrote for Investors Place, if anything can survive the China security crackdown, it's Alibaba. And I totally agree with him, right? This is typical in financial markets. A perfectly good company can be a darling 1 year and then hated the next year. And is this true for Alibaba, right? I mean, it's been well loved for a bit since its IPO, and then it went back down again amid concerns in 2020 that they were going to impose tariffs. US was going to impose tariffs on China or something like that. But then it kind of just, it took off since then. And the same sort of deal. Revenue grew tremendously. Net income grew tremendously. And the stock price just goes down, right? So it shows you that there's a lot of FUD right now going on in the market. So prior to October 2020, Baba stock was typically either in an uptrend or just going sideways. Sometimes the stock tested investors' patience, but it didn't crash. Even the onset of the Roni didn't seem to induce a prolonged downturn. And then it topped on $320, and then eventually is now under $200. Baba's stock trailing 12 months price to earnings ratio is 25.3. Now it's even lower than that. And oh my goodness! Of course, they axed the IPOing of Ant Group, which of course Alibaba owns, I think, about like 33%, in retaliation from Jack Ma going against the Chinese Communist Party. And David Modell is saying that this will pass, and I totally agree with him. I mean, if you're a risk-tolerant investor, you could have and own a few shares of Alibaba and just hopefully watch it grow over the long term. And that's exactly what I'm doing. It's one of my biggest positions. I'm a really strong believer that, this too shall pass, and that Alibaba will go on the uptrend soon enough. And that's just my approach. And if you enjoy this video, please be sure to hit the thumbs up button. It really helps out the channel. Subscribe as well. And let me know down in the comments if you own any Alibaba shares, and if you're going to pick up more in this FUD here. And also, feel free to check out my general channel right here. There's a link down to my description down below, and we talk about everything related to stocks, finance, and cryptocurrencies, and how to make money in the market. And that's it. Cheers, guys. Take care, and I'll see you in the next one.